Hello, everybody. Welcome back. I'm ITK. This is interesting enough video. I kind of did the last video on Wednesday, and I've been thinking about this. First things first. Disclaimer: not financial advice. I am not your financial advisor. If you need a financial advisor, go and get a financial advisor. Okay. Right. So what we're talking about today is RWAs, tip of the iceberg. So I was thinking about xStocks. I was thinking about the kind of impact they're going to have over the course of the next few years and the impact that they're having already. We're kind of only starting to see the real onboarding of real world assets in the equities markets at the moment. Okay. I don't know why, but maybe you had the same kind of thought process as I did. Excuse me. Maybe you didn't. I naturally kind of took real world assets to mean real estate, gold, that type of thing. It seems to be equities that are taking the lead on this. Um, so we'll go through it. It's I'm going to try and keep it brief, which wouldn't be my strong suit, to be honest, right? So real world assets, backed finance. These are the guys behind xStocks, which has been making moves on Sol, right? No token yet. God knows if they'll do one. Who are they? I mean, we look into these things. We look into like teams and what they're doing and what they're trying to achieve, and what their kind of past is and what experience they have in the space. We look at these teams. They're always in the same format, circular profile pictures of the individual's headshot. I don't know any of these people. I had a quick look into Jonathan Goldman, Roberto Klein, and Adam Levi. Couldn't find too much. They were involved in the company, something Stack Dow. Not entirely sure. Can't remember. But this Roy Mattis, the director of the company, and I do like to see this where the founders. Oh, Christ, how do you go back? Having it set up. Anyway, Roy Mattis is the main guy. He has experience with he was with Nice for a long time, and they're a Nasdaq traded company. So he was the CEO of Nice. So fair play to him. Glad to see him coming into crypto. Glad to see people coming into the space making these type of offerings that have a strong background. So what is backed or xStocks trying to achieve? They're trying to, according to them, in their words, investing for everyone. Now, that kind of comes with a caveat, which we'll find out later. But for too long, investors have come to investing has come with barriers, borders, brokers, limitations. It's complicated, costly, and for millions out of reach. Couldn't agree more. That's exactly what TradFi is. Putting obstacles in front of people who are just trying to do something simple. You know, maybe they're trying to start investing. Maybe they're trying to, build a better life for themselves. Well, do this first, do that, jump through this hoop, jump through that hoop. Hopefully, this is taking it away. So they've 61 equities on offer at the moment. All the kind of ones you would expect, with a few others. There's the likes of McDonald's in there. There's the likes of Coca-Cola in there. I think a couple of things, AstraZeneca, things I didn't expect to see. But you know, their offerings are very in line with the crypto markets. Essentially, you're looking at Meta, Netflix, Tesla, Amazon, Nvidia, Apple, all companies that have been known to kind of disrupt their own area. So I like that vein of kind of disruptive technology. They're going with stocks that will attract interest for the type of investor that's there. Robinhood. People are doing things differently and have been trying to do things differently. So why are they offering it? Availability, they're open 24/7. Traditional brokers, 9:30 to 4 p.m. Um, you know, not open on weekends. Freely transferable. You can transfer your ownership to somebody else. They can buy them for you. No commissions, which is outrageous in my opinion. And DeFi ready. Keep an eye on that. Accessible, yeah, sure, whatever. Right. So how are they getting it out there? Kraken, Bybit, Gate.io, Solflare, OK Wallet, OKX Wallet, BitGate, Phantom, Radium, Jupiter, and Camino. So they've given you numerous options on how to get involved. They're showing you, look, we can go down the SEX route or the DEX route, up to yourself on how you purchase the assets, how you interact with it. Um, I love it, love it. Couldn't get any better so far. So how does it work, right? Backed finance seed an amount of asset-backed tokens on chain representing real-world assets. Okay, so Incor are the bank that do it, right? They're the actual custodian of the original stocks. So what they're going to do is match the amount that backed finance pay in. They're going to take them and segregate them away, and then tokens are going to be created and put on chain, equaling a 1-to-1 ratio. So the backed finance internal oracle built by Chainlink verifies the 1-to-1 pairing. They're doing it with SLP and ERC20 tokens. They're available on Ethereum, Gnosis, Polygon, Arbitrum, Phantom, Avalanche, BNB Smart Chain, Base, and Solana. That's the kind of big picture. Important to note that it is subject to Swiss law because they're a Zurich-based company and they're regulated in Liechtenstein. A lot people might kind of go, "Oh, Liechtenstein, everybody panic." Liechtenstein and Lithuania have a little bit more lax regulation when it comes to financial services. The way the European um, compliance and regulation works is you can get passported into other European nation states if you have regulation in one area. You are in one state. You're okay. I'm not going to go too deep into this bit because it can get real boring really quick, right? But essentially, your central bank of the state that you are regulated in, they're your god, right? They're the person you answer to. But when you passport into another nation, you're only subject to conduct of business rules in that nation. Okay, so your papa, your big daddy is in Liechtenstein. Let's say they go to France. They're only subject to French regulation on conduct of business rules, not on underlying practices. Okay, so proof of reserves. This is kind of where it got a little bit bumpy for me, right? So I had to draw this out, right? So Incor are the bank that actually hold the assets. Okay, they segregate the assets, and the network firm is who they're interacting with. So the network firm and Incor, their APIs are kind of going over and back, to make sure that everything is kosher there. Okay, that there's enough assets segregated. Okay, then they use a chain. It says Chainlink Oracle the network here. It's a from what I can understand of it, it's an oracle that has been built by Chainlink for this specific use. Okay, so I don't know, is it Chainlink themselves that are doing this or is it just the oracle? A lot of the times, as we'll see going on into it, when I actually tried to check, it was on an internal Oracle network that was verifying the data. Okay, so they created an external adapter to go between the network firm and the Oracle, the Chainlink made Oracle, and the Chainlink Oracle is basically just pinging the wallets on chain all the time to see, does everything match up, does it all add up. Okay, so it's a decent system. What have I written down there? Proof of reserves every 24 hours or sooner if there's a deviation from previous value of more than 10%. Okay, important to note. Proof of reserves are only available for selected backed products. Okay, right. So when I went to their website to find their proof of reserves, this is what I was presented with. Not what I expected. No breakdown of the assets offered by xStocks or backed finances on their websites. Okay, so I expected to kind of go, oh, proof of reserves, great. Let's go in there. Let's see everything. Let's see maybe a representation of the on-chain assets on their website for all to see. That wasn't there. This is exactly what it presented me with. And I didn't recognize any of this. These are all backed products, not xStock products. So I was kind of thinking, well, where's the stuff I'm actually looking for? Okay, so these are the backed products that are shown on their website, and down the bottom it says information: proof of reserves are available only for selected backed products. I I don't like that. Why not just go all in? If you're going to go this far, it's not that hard to complete the process. Just offer it up. And you can see the list of products there. A lot of treasury bonds, a lot of T-bills, some stocks, some S&P 500, a lot of short duration bonds. Okay, and short duration bonds are much better in this instance. Okay, because if there's a run on liquidity at some stage, you want a 3 to 6 month bond there that you can get access to a substantial sum to allow liquidity. And I was just a little bit kind of pissed off with that. Now, I did find it eventually. It's tucked away. Found it on base scan. This is their address. There's about 14.4 million worth of tokens in their ETH balance and in their base scan wallet. Okay. Here's a breakdown of it. Backed SPX, Coinbase, backed treasury bills, Nvidia, Tesla, USDC. Went into Tesla to see what it looked like. There's 3000 B Tesla there. I have no way of verifying that there's 3000 Tesla in Incore. So do you see what I'm saying? I can see on chain that there are 3000 B Tesla that are circulating and that is out there for everybody to trade with. But I can't see down through the plumbing to where the Incore 3000 Tesla are. So I'd like them to even just provide a screenshot or something. I don't know. It doesn't need to be too complicated, but there just does need to be something. So that I'm not exactly over the moon with the way their proof of reserves are working. Proof of reserve is something that's incredibly important. Why? FTX. Moving on. So who's the competition for them? Kraken are currently offering the xStocks offerings, okay, and they're doing it with no fees. There's no commissions on it, and you can transfer out to self custody from Kraken. So Kraken, I think, are going to be a big player in this space for this. Now, do they come up with their own offering once they start doing a bit of volume? Do they add in a 0.1% fee here and there? I mean, I don't know. It's all going to be developing in front of our eyes. I would assume they will. It's what Bybit are going to do. They're releasing ByReal, and that's going to be a Solana-based DEX that's coming in Q3. That's not far away. I mean, we're looking at what, 3, 4, 5 months to build a DEX. I hope they've been working on it. Robinhood are currently using Arbitrum, but are going to launch their own chain, another real world asset chain. Which do we not have enough of these already? Are there not enough real world asset chains? They're gonna create another chain called RHO, and they're gonna bridge all the assets that are on Arbitrum to it once it's ready. So do I have a bias against Robinhood? Yes. Yes, I do. I do not I do not like Robinhood. Um, just look back at what they did when the GameStop short squeeze happened. Look at the tactics that they used there. I wouldn't trust them with my lunch money, not mind with anything else. Coinbase are going to be competition. They're currently seeking SEC approval for tokenized equities. So, fan of Coinbase. Am I not a fan? I don't like their spreads. I don't like that they don't have a Bitcoin reserve. I don't like that they haven't had Bitcoin on their balance sheet for the last 10 years like they should have. Um, not the biggest fan of them. Gemini, are they going to be competition? They have an offering at the moment, but it's only MSTR. That's the only thing that they're offering on their tokenized equities front. They're probably going to expand that. Where are they going to expand that? I don't know. Are they going to build their own chain like Robinhood? I don't know. It's just something to keep an eye on. Okay, it's things to be aware of. Big players in the space are looking to enter this area, and they seem to be going at it heavily. You don't go looking for SEC regulatory approval for something small. You don't create a blockchain for something small, and you don't create a DEX for something small. Okay, so they're spending time on this and they're putting effort in. So what are the risks? So Bakkt can actually block your address from accessing their contracts. This might be a bit ideological, right? But back in like 2018, 2019, when like the meme of everything's going to be on the blockchain was truly alive, and people were starting to believe, in blockchain as a technology. What people wanted was, permissionless, effortless, easily accessible assets on chain. Um, I don't think anyone really had the level of control. I don't think anyone really imagined this level of control. Um, they can block your address from accessing contracts, and tokens can be burned by court order. I don't know what that means. They're gonna like just get rid of the entire asset, like the token, burn all the tokens. I don't want to go too far into the ramifications of just the risks to this, because this is something I want to believe in. This is something that I want to use. This is something that I really hope succeeds. But there's caveats. Tokens can be frozen in your wallet, seemingly. I Is that possible? I don't know. Maybe it is with the type of token that they're using or the token design that they have in place. Chainlink is a single point of failure. The data, the prices, and the proof of reserves could waver, or the information feeding back from Chainlink could waver. And without that interpretation of the data, the DEXs would just carry on regardless. Okay, they'd carry on trading the asset. You and I would continue buying and selling it. So Chainlink seems to me to be pivotal to the way that this is done. Solana is a single point of failure as well, because this Solana and Base, it seems, are the two areas. Now there's many others. They are going to have offerings on Avalanche. They're going to have offerings on BSC. It's going to be everywhere. But I have a feeling a lot of the activity is going to happen on Solana. Solana has gone down a number of times. I own Solana. Okay, I'm not trying to foot anybody's bag. It's my second biggest bag, so that'll give you an idea just how invested in Solana's success I am. But it is a single point of failure for this. Now, the outages. I'm not a coder, right? I'm not a developer, but from my outside looking in, probably lack of information and understanding perspective, The outages happen because of issues in the Rust code base, and Fired Answer is a rewrite of the code in C++ with the intention of stopping that from happening. And my understanding is that if the chain went down in the same way that it has done previously, the Fired Answer, the validators that are running Fired Answer wouldn't be affected because they're running it in C++ rather than Rust. Okay, that's about 10% of the validators at the moment. Okay, another thing is, and this is a kind of a governance issue and it's not really a risk, but I wanted to highlight it as well. In the terms of service, you do not get voting rights for the assets that you own. Now, for those of you who have a stock portfolio or a pension that is invested in equities, if there's a vote, you get an email, log in here, cast your vote on these issues, and every share has a voting right. And my kind of question here is, okay, if I hold a share in my Kraken account or in my self custody account, who gets my voting rights? Because there is an asset backing that. Does Incor get it? Does xStocks get it? Does Backed Finance get it? There's no explanation. I would like an answer around that. Okay. Opportunity. So the way I see things, I think the bulk of this activity is going to happen on Solana, right? So there's an opportunity there for Sol. Chainlink is pivotal. Okay. Does it lead to a token appreciation? I don't know. I don't know enough about Chainlink to comment on that. I don't know, do you need Chainlink to run that Oracle? I'm just not clued in on how Chainlink works. Okay. Radium, because these assets need, liquidity. They need liquidity in order to trade. And from what I can see, the bulk of that trading activity is going to happen on Radium and is happening on Radium and Jupiter. But the liquidity pools seem to be on Radium. Robinhood, kind of on two fronts. One, on the actually, creating their own blockchain to carry out these activities. I think they're going to win on that front. Now, is that priced into the current price? Robinhood is exploding at the moment. Okay. I don't know. The price activity certainly seems to think that something is happening there. Just look at the chart. It's wild. And secondly, all of these, because of the way Robinhood did things when they started out with Citadel, and the way that they kind of changed stocks and investing and the gamification of it, they're a disruptive technology to the TradFi space. So they are naturally going to be offered as an asset that can take advantage of this, and they're going to be on every blockchain essentially, or every one that matters. So there's opportunity in the out of hours access. Okay, we're going to see kind of, these are 2 points in one. Liquidity gaps, right? It's very low volume at the moment, but the market closes 4 p.m. New York time on a Friday, and Elon Musk comes out and says something outrageous that night, and suddenly everybody hates him, and the stock value plummets in after hours trading for the course of the weekend. Now, the prices on, most people don't have access to out of hours trading for a start, right? You need to be high up enough to get access to it. You need to have a high net worth. Having access to a stock that can fluctuate based on, world events on a Saturday evening, we're going to see prices on chain that will never actually appear in brokerage accounts. Okay, so there's an opportunity there. You know, people could think it's the end of the world. Crypto investors who have, you know, stocks X or X stocks Tesla, um, could absolutely plummet that value on chain, but that won't be reflected in the order books. Okay, so there may be an opportunity there to take advantage of that kind of wild fluctuation of value that crypto is used to, but that TradFi stocks aren't really used to. Okay. The last thing is the implications, the golden god. In the words of the golden god himself, the implications. So when you look at how high net worth individuals kind of get access to funds, it's often through um, using the assets that they have to release equity, and that has a threshold, right? So generally, I don't know about what it is where you're from, but you wouldn't be going into you know, an investment bank here looking to release some equity from any shareholding from any position that was under 300 grand here. They wouldn't look at you. They'd laugh you out of the building. These stocks are going to be DeFi ready. So we're going to be able to hold our positions, for better or for worse, in on-chain DeFi protocols to release equity from our on-chain assets. And that can cause all kinds of issues, but it's definitely something that I'm down for. You know, if you've, you know, 200 grand worth of Sol, and you're saying to yourself, right, I have to have a tax event here to sell my Sol to get access to my to get liquidity. Instead, can you, you know, can you release 30% of the equity by um, providing collateral in the form of Tesla on chain, where you can't get access to that type of product, were you to do it in the TradFi setting. So, you know, there's all kinds of implications here. Um, I'm a big fan of it. I really hope they don't mess it up. I'm trying to say is stay as family friendly as I can here. I don't believe I cursed even once. Right, it's Friday evening, and I'm ready to sign off. Yeah. So listen, tell me how you feel about it. If there's anything there that you want to discuss further, feel free to do so. Ask questions. Right, have a good weekend. Touch some grass. Bitcoin's at all-time high, so you know there's that. Hope everybody's doing well in the markets. Enjoy it, and I'll probably be back Monday with a small video, maybe like a market update or something like that. Okay, take care of yourself, guys.